In the world of technical analysis, everyone has heard of the golden pocket, but did you know there's something more powerful? It's called the platinum pocket. Welcome to Chart Prime. I'm Army Piper, and today we're going to dive in, take a look at how to properly know where to place your Fibonacci's, how to set up a golden pocket and a platinum pocket, and how to supercharge your indicators. Let's get primed. When it comes to price action, the charts can be a little confusing sometimes. That's why in technical analysis, we use indicators to figure out where those bounces and rejections could be at in price reversals. Let's take a look at the Fibonacci sequence. Firstly, we're going to place a Fibonacci retracement. To find this tool, simply go over to this section here and click Fib retracement. To place this, you want to find the highest wick or the lowest wick of a previous high or low. For example, if we were looking at this high and we saw this bounce here on the low, bringing us higher than our previous high, this would be a point that we would want to place a Fibonacci retracement. By clicking on that Fibonacci retracement tool and simply clicking the top wick to the bottom wick, we can see that we now have placed the lines of our Fibonacci retracement sequence. Immediately, we can see that the reversal point on the price action occurred in the golden pocket. To set your Fibonacci retracement up to have the golden pocket, you may want to pause that video right here so that you can write this down. The Fibonacci consists of the 61.8% Fibonacci line and the 65% Fibonacci line. You can see that I've turned these two lines gold so that they show up as a golden pocket. So now that you have your golden pocket set up and know how to read the most likely point of reversal on a Fibonacci sequence, let's take a look at what you do when the golden pocket gets broken. In this example here, we're going to be looking at this previous high to this previous low. And I know you might be asking, bro, how do you know that's the bottom? Firstly, I don't know that that's the bottom 100%, but I do have some ways that I can tell that it's likely a reversal point in price action. Here's the two ways that I knew that. One, price structure has started to create higher lows in a series, in addition to higher highs in the series. The second way that I know is because if I turn on the Chart Prime Market Oracle and we take a look at the candlestick pattern that printed, we had a morning star. A morning star is a very powerful candlestick indicator that tells you this may be the peak bottom, or an evening star telling you that might be a peak top. You can see here on this 12-hour chart, we previously had one before, giving us indication prior to this entire run-up. But let's not get ahead of ourselves with the Chart Prime indicators yet. Let's focus on this Fibonacci retracement. By again clicking on the free tool to your left of your trading view and clicking on Fibonacci retracement, we're going to place this at the highest wick of the previous high. Upon the double bottom where the morning star printed, let's place the bottom and let's take a look at how this price action plays out on a candlestick replay. Now let's stop and analyze what happened with price action here. You can see here that price had hardly any reaction to the golden pocket as it was on its way up. But we did have price action here, and we did have price action here. What exactly happened here that made the golden pocket so weak, but something else that we don't see so powerful? That would be the platinum pocket. The platinum pocket consists of the 78.6 Fibonacci and the 88.7 Fibonacci. You may want to pause again, grab these settings. This is the 88.7% Fibonacci line in play with the 78.6 Fibonacci line. Those two combined create the platinum pocket. If we take a look at this on a daily chart, you will see that the candlestick close of the body never broke below the platinum pocket. You can also see that we had multiple points of support at the top of the platinum pocket on the 88.7% Fibonacci line. If you use this technique properly, when you fail to get price rejection or a price bounce on the golden pocket, you can assume that the platinum pocket is now in play. And those price levels are usually very powerful once the golden pocket has failed. Now that you understand the Fibonacci retracement and how the golden pocket and the very secretive and rarely seen platinum pocket works, let's take a look at what you can do to identify reasons and levels that price action may move to once a Fibonacci retracement has played out or in between Fibonacci retracement levels. Check this out. By adding the Chart Prime Market Oracle onto the chart, you can see that we had multi-confluence of the platinum pocket on the daily chart lining up perfectly with the dynamic reactor for our point of support. If you would have gotten into a long trade on this very powerful multi-confluence support range, this would have given you over 20% gains with no leverage.
Whoa.
Jumping back over to our 12-hour time frame here, you can see that we have broken the entire Fibonacci range of that previous high point. So in technical analysis, what do you do when it's broken out of this point? You can draw another Fibonacci retracement, which is currently given resistance to price action in the platinum pocket range. But with a little sprinkling of chart prime mojo, there's some other things playing out here. Let's dig in and see what it is. Turning on our smart money concepts bundle, I have added the predictive ranges to this chart. If we take a look at this indicator without any other action on the chart, we can see here that the predictive ranges consist of 7 lines. These 7 lines are the blue delta. This will be your 50% line in the predictive ranges. You have an upper gold band and a lower gold band that will be your trade pocket for that predictive range. You have an upper resistance line, a lower support line, a top frame, and a bottom frame. When price action breaks this top frame or bottom frame and a candle closes outside of that, that is when Chart Prime will print an entirely new predictive range. The most important thing about predictive ranges to note is that a majority of price action will occur within the 2 gold bands of the predictive range. I call this the predictive trade band. If we turn back on our candlesticks, you can see here that a majority of price action occurred within the gold trade bands. That is typically how predictive ranges play out using Chart Prime indicators. So let's go back and take a look at what we had here with our Fibonacci retracement. Again, you can see that we had our bounce point in the platinum pocket. I hope you paused and got those settings. If not, go back and watch it. But once price action broke above the Fib retracement range, how do we know where points of rejection would be at? For example, how could you catch this short? Let's check out those predictive ranges overlaid with this Fibonacci retracement. Taking a look here, you can see once again that we rejected twice off of that top trade band of that entire trade pocket of the predictive ranges. You can kind of consider this a chart primed golden pocket. And with a little bit of knowledge of traditional TA, with an understanding of how to use Fibonacci retracements, added to the supercharged power of Chart Prime, you will crush gains. Let's jump out of these charts and wrap this up. And so there you go, folks. That's how you set up Fibonacci retracements. And now you've seen the power of the golden pocket, the platinum pocket, and the supercharged power of Chart Prime indicators. If you like this video, hit that like button below, hit that subscribe button, hit that notification bell, get notified every time we come out with this type of educational content. And if you're ready to supercharge your technical analysis, check that link below, get 45% off Chart Prime indicators, and get ready to crush your profits. Thanks for joining me today. This is Chart Prime. I'm Army Piper. I'll see you next time. Stay primed.